On this graph, you will see something that is very bizarre with AMD's earnings per share. You can see that in Q1, we had $0.07 earnings per share. And according to my models, there's a potential of AMD more than 10x their earnings per share within the upcoming 12 to 18 months. Why is that? Well, in my opinion, their MI300 sales is on the cusp of exponential growth, and MI300 sales is gonna bring to AMD insane gross margins and insane net income. So you can see actually that the entire company's revenue will be affected by this, because on the right part of the chart, we can see AMD's total revenue, and you can see the moment MI300 comes into the picture, it immediately increases after the stagnation of the couple of last years. So let's look into further detail how this future will play out according to me. So we can see that AMD has four big different business segments. The biggest one from now on will be data center, but if we look at historically, usually it's been shared between the gaming, the client in let's say 2021, and then since the gaming and the client business is highly cyclical, it's like up and down on a let's say 2 to 3 years basis. So you can see 2021 and 2022 was fairly strong for combined gaming and client segment, but then in 2024, since everyone has upgraded their laptops in the 2 years previous to that, especially during the pandemic, we can see that people stopped buying laptops and gaming hardware, which affected AMD's revenue and the stagnation that we can see here. Then we have the green part. The green part is the embedded part, which is mostly coming from the Xilinx purchase that AMD did back in 2022. Xilinx was the biggest player on the market in terms of field programmable gate array semiconductors, so FPGAs shortly named. And their main competition in terms of Xilinx was coming from Intel's Altera, which they in turn bought, I think, in the middle of last decade, 2016 sometime or 17. So Xilinx and Altera were the two main players, and I would say that Xilinx right now is the market leader. The only reason why Xilinx revenue now in the last couple of quarters kind of stagnating and going down is because of it's highly based on the industrial, for example, car manufacturers, and the car manufacturers are facing some challenges right now, especially over the past year, which I think will ease by end of this year or early next year. So I think Xilinx will have some stagnation, but the good thing about Xilinx is that despite the revenue decreasing, they enjoy like some very high gross margin, like 45-50%, even at low revenue basis. Whereas the other two segments, the gaming and the client, the moment they go down in let's say revenue, you'll see the loss also in the net income. But the Xilinx part is very confident in terms of making money even at low revenue. But the important part here is the data center SC. But in order to get a better picture, let's look at what AMD's data center revenue actually consists of. So traditionally, AMD's data center consisted of essentially only the general purpose CPUs, in which they try to claw back some market share from the market dominant player that was Intel. This is in the time frame until let's say 2017 or even 18. In 2017 and 2018, AMD launched their new Zen lineup, and they added to that with Zen 1, Zen 2, Zen 3 and different generations. And with each generation, they started to eat into Intel's market share to the point where they went from essentially zero market presence to now well over 30%. And I think it's highly possible that AMD will even have, I don't know, like 40% by end of next year, or even 50% in 3 or 4 years from now. So that's definitely in play. So AMD's EPYC lineup, which is their CPU part of the business in the data center, although it's growing slowly, it's actually growing steadily, or if you average it out. And I think they will gain more market share and, more importantly, gross margin in that business, because until now Intel has been struggling so much. But now, since AMD getting a major footing, and in the server kind of space, people are not changing so easily. Once they sign up to you, you have to do something really, really bad in order to lose them. And I don't think AMD is looking to do any mistakes right now. So I think the margins will improve, as well the relationship with the big cloud customers like Amazon and Microsoft and so on. And then something happens in Q4 of 2023. So this is the first time that AMD books revenue from their AI GPU, something that Nvidia obviously did essentially 12 to 6 months ahead of AMD, and also in faster and larger ramp up. But don't be worried, because you can see that the blue part of the segment, which is AMD's MI300, and from the next month, I think on the 10th of October, we will have their second generation MI325X, and they have a very, very tight schedule early next year with MI350X, which we will talk in this video. But you can see that AMD is poised to, increase their revenue essentially by right now $500 million or thereabouts with each quarter. And by end of next year, maybe closer to $1 billion. I try to be a bit conservative, but I think these are the numbers that we will see. Maybe even, again, to some degree conservative. And this is obviously affecting AMD's total revenue. You can see how the white part, which is the total revenue, starts to increase the moment MI300 enters the picture. And why was MI300 so important? Well, you can see that on this graph is the AMD's EPS in the green part. And on the blue one, you can see the moment MI300 enters and how much revenue they get from that. And the green part of the graph you can read on the right side of the axis, so that is earnings per share. You can see from 0 to $3. And on the left side, you can see the chart for the rest of the sales of Epic, which is their part of their server sales, Instinct, which is their MI300, so the other part of the server sales, and the white part is obviously in the millions, tens, thousand millions of AMD total revenue. And interestingly, you can see, as I mentioned in the beginning of the video, we will see an explosive growth of GAAP net income, because the problem for AMD right now has been, despite the data center increasing even already compared to, let's say, previous years, actually we can look at it from this way. So you can see here that AMD's data center sales, if you look at, for example, let's start with the Q4 of 2022, was 1.6 billion, and then struggling between 1.6 to, let's say, 2.2 billion until Q4 of last year. And then you can see all of a sudden we are at 2.4 almost, 2.9 in Q2. And then most importantly in Q3, well north of 3.4 billion. Why did I say that? Well, because the company guided for a revenue of 6.7 billion US dollar plus minus 300, right, in the previous quarter. So if you, let's say, even take at the low end of that guidance, we know that the embedded wouldn't increase a whole lot for AMD. So I just went with a, 20 million increase, because Lisa Su over the years has said that in the second half of this year, the embedded part should kind of rebound to some degree. So I added a couple of, 20 million extra, but that's not going to do anything on a 6.8 billion revenue. Gaming, I was very conservative. I know that PS5 Pro launched yesterday, at least to pre-order. I think Q3 and Q4 will be stronger compared to last year for the gaming side and for the client combined. But I don't think the gaming side will be as strong in Q3. So let's wait and see. But you can see I had a nice increase in client revenue from almost 1,500 million to 1,900 million. But the lion's share of the increases goes obviously from, the server side, from 2.8 to 3.5 almost. And based on that, if we go back to the charts here, so you can see that the revenue in Q3 is actually very close or just above the revenue in Q2 of 2022. And the problem is that back then, if you actually go back to this other chart, the other segments were much stronger. So if you go to Q3 of 2022 and Q2 of 2022, you can see that the pink part, which is gaming, and more importantly client, they were much larger than they are right now in this space here in Q2 and Q3 of 2024. But that was a super cycle. So I think this will come back. And as you can see, I've modeled in for next second half of next year, those two segments will be strong as well again, and combining to revenue growth. Not as much as the data center, but they will do. And before we look into, let's say, the more technical details of MI300 compared to the competitiveness of Nvidia's H100 and even Intel, we can quickly see that both AMD's GAAP income and non-GAAP income gross margin will increase and poised to increase quite substantially from, let's say, the low, like 40% to now, well above 50-60%. I think my models have it that by Q4 of next year, we are close to 60% gross margin. And the interesting part, most critics has looked at AMD and looked at the non-GAAP income, right? So if you look at the non-GAAP income, which is the green one here, you can see, for example, in Q1 it was only 7 cents for a company that made I don't know, like 5-6 billion in revenue. So that wasn't a whole lot, but if you actually think about it, the price per share is, or at least at some point in Q1, the price per share was over $200 or thereabouts. And if the if the company's earnings in that quarter was 7 cents and the price was at 200, I understand why the critics that don't follow the company more exactly would have thought that, oh, this is a historic bubble. Because think about it, if you take 4 times 7 cents, that, let's say 30 cents, right? And if you have a company that is trading at $227 that AMD did back in April or March, that's, I don't know, that's like 400 PE ratio. But then again, if they would have just zoomed out a little bit, you could have seen that already in Q4, for example, the earnings was much higher. But also, if you zoom out for the future, I think the problem is that they don't see this, like the extreme growth here. So for example, if my models is right and we have, let's say, $1.50 in Q3 or Q4 of next year, and if we annualize it times 4, that's $6 earnings per share for a stock that is right now at, let's see, how much is the company trading at right now? I think it's close to 150. So AMD is currently trading at $144. So if you actually take $144 divided by, what did we say, $6, right? So then the company is trading 24 times next year's earnings. But remember, this is for a high grow company. This is not, like a 10% increase. I'm telling you that if these models are right, the earnings per share compare, for example, from Q1 of this year to Q1 of next year will more than 10x. So that's insane. But anyway, so one way to actually don't lose yourself in the earnings per share is to look at the non-GAAP earnings per share. So if you look at the non-GAAP earnings per share for AMD, it's usually been much higher. So you can see that on the red part of the graph, it's been higher than the normal GAAP gross margin and earnings per share. So if you look at the actual numbers of how much that is, so here we can see the GAAP and non-GAAP compared to revenue as well. And you can see that if you go, for example, sometime in 2022 and 2023, the light part gray is actually much higher, and that is the non-GAAP one. And the darker gray, the smaller part of the gray bars, is the actual GAAP earnings per share. And you can see that at times there was non-existent earnings per share, for example, Q4 of 2022 in terms of GAAP, if you calculate it by GAAP. But then if you look at it at the other one, non-GAAP basis, it was like 70 cents. So it was very substantial. And the problem is, again, because they purchased this green part of the company, as you can see, embedded Xilinx for like 40 or 45 billion US dollar back in 2022. And they now start to, pay, I don't know, like around 2 billion or 2.5 billion per year. So divided by 4 quarterly basis, you get like around 500 million that they amortize every year for that purchase. And that's going to be visible in the difference between GAAP and non-GAAP basis. That is why we could see these huge differences. But as the time goes on and the revenue increases much more, and the amortization of the Xilinx purchase goes down a bit as well, we can see that the difference between them at some point next year will be much more less. And if you look at actually the difference, I did this graph for you, so you can see here, the red part is the non-GAAP one, and the blue part is the GAAP one. And obviously the non-GAAP is still higher, but then you can see that there was one other than this one time here in Q1 of 2024, where there was a one-time cost, I think around 65 million for something that happened in one of their suppliers. So they had to write down 65 million US dollar in essentially damages, I guess. And other than that, if you exclude that one, you can see that this time is kind of closing. And you can see that if you exclude that Q1 of 2024, over the past 4, 5, 6 quarters, the difference between the GAAP and non-GAAP is kind of decreasing as well. And that is to be expected. So I think that's going to be visible in the stock price. How much is this scenario of AMD's revenue growing like this realistic? I think it's very realistic, unless we see, a huge crackdown on the AI bubble kind of, but then it would affect the entire market and mostly Nvidia as well. So unless something like that happen, and if you read the industry insiders and you try to figure out what's happening out there, you look at the supply chain, nothing looks like that right now. But you know, it could change. I mean, who knows? But anyway, so you can see that based on my calculation of AMD's chip on wafer on substrate capacity, and those estimates are, you know, roughly from, let's say, the summer of last year, end of last year, summer of this year, end of this year, summer of next year, and end of next year. And those like are in the green are the capacity at TSMC. Obviously, I don't know exactly these numbers. It's just roughly in the ballpark. Like for example, here we could, some people say it's already at 45,000. Some people say it's less than 30,000. So it's difficult to say, but I try, at least we know that right now it's not 300,000, right? It's not 300,000. It's not 3,000. It's somewhere around 30,000. And Nvidia has the lion's share of the capacity. And to be honest, Nvidia, if you for any given time, let's say compare next year, they will have more than 10 times the wafers, or let's say 10 times the wafers than AMD. But remember that AMD is around 6 to 12 months behind Nvidia. And there's one scenario where AMD actually starts to eat up into the difference. So I believe I'm a bit conservative here in terms of AMD's relation to Nvidia in terms of wafer allocation. But let's stay at around less than 10%, because that's still a lot of money for AMD. If you look at it, MI300, if you have 1800 wafers, and these are wafers per month, and if you, for example, take the 1800 times this here, and what is that? Well, that is the number of chips that they can manufacture per wafer. And then you get the number of chips that they are theoretically able to produce per month, around 125,000 in the summer of next year. But actually, I don't believe it's realistic to go with these 69 chips per wafer. I think there's a lot of, damages in the production line. No production is perfect, and there's this issue with yield. And in addition to that, AMD has another step that Nvidia doesn't, because AMD kind of glues together 8 smaller chips together, as you can see here, 8 times 115 square millimeters, whereas Nvidia's H100 is one giant chip, has its own drawbacks obviously compared to AMD's. Both of these manufacturing methods have different drawbacks and preferences, but we can see that AMD takes a loss from the 69 chips per wafer due to, say, packaging as well. And if you take this more conservative number, we are down to, let's say, I don't know, less than 100,000 chips, or say 100,000 chips. And if you take, for example, the average sales price of $15,000 US, then you would get a revenue of around 1.5 billion. Now, to be honest, please, for the love of God, don't take these numbers for exact. It could easily be half of this or double on that. Although in AMD's case, if it would be double, that would be $3 billion US revenue per month, or like something like that. It's crazy. I think for AMD, this is just, a very rough ballpark. For example, we know that by end of 2023, AMD booked 400 million in revenue, right? And if you look actually at this number here, that works out to be around let's say 360 million in MI300 revenue at the run rate that they had based on my calculations in end of last year. And then she said that after Q1, they managed to sell combined 1 billion in MI300, which was the fastest ramping AMD product of all time. And that would be then around 1 billion of MI300 sales in Q4 of last year and Q1 of this year, right? And this is more easily visible actually if you look at it here. 400 million in Q4, 600 million in Q1, combined of 1 billion. And then that's also kind of realistic if you look at my numbers here, because by that, let's say by end of that year and early this year, there would be around 200 or 250 million per month capacity. And if you do this kind of train of thought, you would be, I think by end of this year, around 1 billion or maybe 1.5 billion of capacity per month. And if you look at my, let's say, expectations, so here, this is very interesting. For 2024, we had 600 in Q1. Here you can see AMD MI300X, and then at 15,000. Again, these are rough numbers. It could be that the average sales price is higher and the number of units are lower, or vice versa. So it's just roughly in the same ballpark. And then I added a bit more data here about the power consumption, the memory capacity, and some other stuff like the node, manufacturing node, and so on and so forth, and then some of the AI capability. But if you look here at 600 million in Q1, 1 billion in Q2. Also, she said in Q2 that in the earnings call a couple of weeks ago, 4 weeks ago maybe, that they managed to sell more than 1 billion in Q2. So okay, that seems visible, realistic. I assume some sort of ramp, because all year she has talked about ramping into the second half. And if the difference between Q1 and Q2 is, 500 million, and if the second half should be higher ramp capability, obviously then we have to be at least at 1600 or thereabouts, maybe even conservative here, but anyways. And then by Q4 I said 2.1 billion of a combined 5.4, which is around 900 million higher than she actually committed to in the last earnings, which was 4.5 billion. But I don't think any company in this bull market, if they know the number is, let's say, 5 or 6 billion, she says 4.5, and then she has the the possibility in the next earnings to say, oh, we raised it again, 4 or 5 times we raise our guidance. So I think that's what she's doing essentially. And then for next year, if you go to AMD, I believe we start the year strong at 2.75 billion, and then just increase by increments of $500 million or even more than $500 million to a combined 13.8 billion US dollar. And that I think is possible so long as there is no AI market crash. So if we go back to those numbers, remember that 13.8 billion US dollar, and we can see here that my own calculations, if you model it into the model here, you can see that by end of next year, this should look like this. So Q1, Q2, Q3, Q4, and then which also means that this number 13.8 billion for full year next year would be more than double that Q4 of 2024. And if they manage to hit anything like this, if they manage to do anything like this, I'm quite confident that AMD's earnings per share will also follow to these kind of levels, $1.5, $2 per quarter. Remember, per quarter, if they manage to do the bull case here at $2 per quarter, that's $8 per share per year. And if you take that times 30, that's $240 stock price, right? And who's here to say that the AI bull market is finished now? I, for one, don't think so. I think this could continue well into 2026. At least if you have to trust the, Lisa Su, Jensen Huang, TSMC's allocations, TSMC's monthly revenue, I think that's possible. So in that case, by the time we are, at these numbers that I show you here, there's nothing to say that in 2026, those numbers won't go even higher to maybe $3-4. So that's the beauty with this kind of margins that they enjoy. Look at again the margins that they have here. So look how quickly after MI300 introduced. So this was for example, AMD's gross margin around 40 to let's say 46 for the longest of times. And then the moment with 3 or 4 quarters on MI300, we go from let's say 47 pre-MI300 in Q3 of 2023 to well over 50% in Q4 of this year, and closer to 60% in Q4 of next year. And this is where the explosive growth comes. Those additional 15% of gross margin, 12-13% of gross margin will show up in the net income by insane amount. That's gonna leverage the net income insanely, like as I showed you as well on the graph here. You see the net income will and the earnings per share will just explode in a way that I've never seen in AMD at least. So yeah, that's gonna do it for today. I think AMD is honestly, in my opinion, the best risk reward in the AI space. The stock is not necessarily cheap right now, but I think if you just wait 1 quarter, you'll see what I mean. Unless there's a major market crash, especially in terms of AI demand. Who knows about that? We know that the crypto mining boom also happened. So again, do your own due diligence. And this is not investment advice, but this is my own opinion. So thank you for watching. Please like and subscribe, and see you in the next one.